Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jon Ferro, along with Lisa Abramowicz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. David Kelly of JPMorgan Asset Management, Tom Porcelli of PGIM Fixed Income. Gents, good morning to you. David, first to you, your reaction.
Well, I think what we've got is a moderate moderation in the U.S. economy, both in terms of growth and inflation. Inflation it's taking its sweet time coming down, but we still think it's a downward trend. And I think the reason for the market reaction is that we didn't get an upside surprise. So we've now had three reports. We've had the jobs report, then we had the consumer sentiment report, and now we've had the retail sales report. And they're all saying, overall things are moderating here. When you look at the JOLTS number, things are moderating. We've got fewer job openings. So it looks like the economy is just easing itself into sort of a 2% corridor of 2% growth, inflation gradually coming down towards 2%. And that's very good news. And I think the good news is that we didn't get another upside surprise in CPI today.
Does that whisper of a July cut grow a little bit louder after this, or is July still too soon?
I don't know if the whisper, it's already been a whisper. I don't know if it can become less of a whisper. I think it sort of stays where it is, which is to say, around 25%. I think that's probably reasonable. It doesn't go away, though. I think that's the important thing on the back of this. So I think it could probably still linger. But I think as a practical matter, it's probably going to get pushed a little bit, and I have no challenge with that. In fact, one of the things that I've been sort of critical of Powell when it's been mostly deserved. But
there's no pushback around this table.
But recently, I think he's done a good job with the narrative, right? Like I think after the last presser, and actually the presser before, where he said, hey, look, we're not going to overreact to a couple of, sort of strong string of inflation reports, just like we didn't overreact to a really soft string the last go around. So I think that this to me is a chair who wants to cut. I think that, and you can easily see one, and I think if he has the opening, I think he'll do two. And I think data like this, if it persists, I think that'll give him that opening. And sorry, I'll make this one last point, and I think
Sure.
David rightly highlighted this. If you look at that control number on retail sales, it was pretty weak. And again, no one's making the case that we're sort of falling off a cliff here, but I think things are slowing down. And that would be consistent with the Fed having the ability to cut.
We were just speaking with Ed Yardeni, and he doesn't necessarily have the same kind of sanguine outlook that you do with respect to Jay Powell, because he says, honestly, the consumer is strong. That, there was weakness in the control group, but as Mike was saying, it has to do with auto sales. It's not the sort of broad-based people not going out and spending things. Yeah. So at what point, David, do you look at that and say, you know what, things are fine now. Why the rush to cut? I know you are in the please cut now, and you should have already cut camp. But why is it not that we see things are just fine and you should stay in here and only a cut would turbocharge a rally, which is exactly the reaction we're getting today?
Well, I think you should normalize interest rates. I think the Federal Reserve for a long time has been trying to micromanage the economy with rates that got too low and too high. I think it messes with financial markets. And, the more the Federal Reserve, tease off financial markets, the more financial markets sort of act like sort of babies here. You shouldn't have had this much of a reaction. But you get this reaction because of the Federal Reserve is so sensitive about saying anything that might offend the markets one way or the other. When economic numbers are a little bit off one way or the other.
Is it fair to say their reaction function is set up for us to be hypersensitive to data?
I think markets have an overreaction function. That's the problem. And so markets just overreact. And so the Federal Reserve, you kind of have to expose the markets to normal policy. Normal policy is if the economy is doing okay, rates ought to get back to normal levels. And I do think, I don't think July, but I do think September is possible. It's there. And I think Jay Powell himself will actually make a decision as he heads towards this about whether he wants it himself. Because the one thing that we've seen about Jay Powell, which is very clear, is he wants to build consensus and he works hard and actually lobbying. I wouldn't say lobbying necessarily is the right word, but he does. It's a good word, but he does talk. I think it's amazing that he talks to all 19 participants at the FOMC meeting before the meeting and just, this is my view and so forth. And that's why he's been able to get so much consensus. So if he thinks that, look, let's get going, on a slow rate cut cycle before the election, so we can, and let's get it going here, so we can't be accused of playing politics. I think he might well do that in September.
Tom, you seem eager to weigh in.
No, I agree. I think David is completely spot on. Look, I think this is just a recalibration cycle. This is not people hear cuts, and I think that immediately conjures up the images of the Fed like getting aggressive. Like, we don't think that that's the case. We think that this is going to be a sort of a very modest reduction in funds.
But talking about markets as babies, right?
Yep.
This question of how they react has been basically a feature, not a bug, of financial policy. Yeah. This was the transmission mechanism. We've been talking about this all show. How much do we get a rally on the idea that we're going to get a cut, and that's going to be a problem. It's going to set us back further and actually cause this to be more of a problem and more sticky.
Well, I think the Federal Reserve makes a big deal about how they don't allow politics overrule what they're doing. They should also do the same thing about market reaction. So they should not overreact to how the market reacts to either economic numbers or their own policy. But also, what they need to do is, and I completely agree with you on a recalibration here, because what they need to talk about is not monetary easing, but monetary normalization. The truth is, I don't think that we're heading into a higher for longer environment. I think we're heading into a normal for longer environment. There's nothing wrong with 4.5% on a 10-year Treasury. That's actually about right, given a 2% inflation.
Normal for Fed funds?
I personally think normal for Fed funds is somewhere between 3.50 and 4. I mean, in the 50 years before the financial crisis, it was 2% above core CPI inflation. That would be 4 in the long run. I think, somewhere 350 to 375 to 4 would be about right.
No, I mean, I just found my new best friend.
It's love. Look at this. Carry on.
No, I think yes, I agree. I mean, I think
it's love.
I think that's exactly quite right. I think that this, to me, is I think this is the right way of thinking about where we're going. I think 3.5 to 4% is probably the right range to consider this in. And the good thing about that is that is roughly what the market is expecting. So I don't think that there has to be some big recalibration as it relates to the market, because expectations seem to be roughly right, although the market has tended to take things way too far. Let's be honest on that.
We'll get to the market right now. Equity futures are positive off the back of this economic data. I know a few of you just tuning in. This is what you missed. 0.3% is the number for CPI. 0.4 was the estimate on a headline basis. Stripping out food and energy, 0.3 against an estimate of 0.3. The Russell outperforming. The small caps up by 1.4%. Thank you to the bond market. Treasuries rallying, yields dropping across the curve. The 2-year down about 7 basis points now to 4.74. Mike McKee still alongside us. Mike, you've had longer to read through this. What stands out now?
Well, a couple of the categories that people watch closely performed pretty much as expected in that used cars were down 1.4%. Insurance, health insurance only up 0.3%, but unfortunately, auto insurance still posting a big gain, 1.8%, down a little bit from last month, but still an outsized gain. And John, you had a probably good discount on your trip to Paris this week because airfares were down 0.8%, which is kind of interesting because the CPI tends to include what people are buying for vacation time ahead. So we'll see if airline fares can continue to behave.
Just for the record, it was Taylor Swift weekend in Paris, and I booked the flight, I think, a day before I got it. So, Mike McKee, that was not cheap at all, just for the record.
Did you enjoy the concert?
I didn't get to watch the concert, but it was very busy. Can you imagine me at a Taylor Swift concert?
Yes.
Mohammed went.
I know.
Mohammed's going to be on the programme on Friday.
Bright pink. It was fantastic. He said it was amazing.
Did he really think he wouldn't be seen in that T-shirt?
All I know is he's now a Swiftie.
Mohammed's going to join us Friday for a review of the economic data and apparently a review of the Taylor Swift performance in Paris, France over the weekend. David Kelly, I want to come back to the Federal Reserve, certainly not on Taylor Swift. You've said repeatedly that the Federal Reserve should just have faith in the calendar. This is going to work itself out through the next 12 months, regardless of how restrictive they think they are. Is that still your stance?
Absolutely. I mean, if you look at airline fares, I mean, we've actually got air travel back above pre-pandemic levels. There's plenty of demand out there, but the airline industry is competitive enough for airline fares to come down. But overall, in some areas of services and throughout the goods industries, what we're seeing is enough competition to gradually push inflation down. So this is not an inflationary economy. The only time it's an inflationary economy is when you have a huge supply chain disruption and you have huge fiscal stimulus where you're giving money to low and middle income households, that is the one way you can generate significant inflation here. Once you take that away, inflation will gradually drift down, and that's exactly what it's doing. It's just very gradual.
Tom, do you think a lot of this market reaction, though, is actually the CPI or the retail sales? Because CPI is pretty much in line. Retail sales was much softer.
Yeah, I mean, it could also be a sort of a better than feared, because as we were saying, I think before we were on camera, this could have easily been a 4/10. So I think it could have been some of that for sure. The thing too about inflation is I just think, look, I don't know about the wisdom of stripping out an assortment of different things like super core. I mean, you're just stripping out 50% or more of the weight of inflation, which I have no problem stripping things out of inflation. But what I would say is if you want to do that, then go the next step, right? Because what we know is that auto insurance has been a thorn in the side of inflation. There's nothing the Fed can do about that. And if you strip that out, inflation looks even a little bit better. So to me, that's just keep in mind there are some idiosyncratic sort of sectors that are really impacting inflation that the Fed has no ability to control. So in that context, I think it's an even better outcome.
And also, I mean, the Fed, for good reason, sets a target at 2%, but no economist will honestly tell you there's a big difference between 1 or 2 or 3. Exactly. So long as you're there or thereabouts, you're okay. And then what you do is do no evil. Do not distort financial markets by having rates at a significantly incorrect level.
So then should the Fed just be targeting 2 to 3%?
Well, in Canada, they have a range of 1 to 3%. And I kind of like the idea of a range of 1 to 3% as a target. We get in that range and we're fine.
I totally agree. In fact, I always use the RBA. I know, it's terrible. I'm sorry for you all.
Carry on.
Just go for a drink. Start the weekend up.
Exactly. David's using Canada. I've used the RBA as a great example. And the RBA has a range. And I think a range is just saying 2.0% to me just strikes me as like the pinnacle of hubris. I mean, you rarely sit at 2.0% for any period of time. I think a range is really the right way of thinking about inflation.
And it actually caused tremendous problems last decade because they kept rates way too low for way too long as they were trying to get inflation up to that 2% target. Yep. And that fueled a lot of the asset bubbles and real estate bubbles that we're now suffering from.
So anyone who took the survey, the University of Michigan survey last Friday who's listening to this says, what are they talking about? They're in Goldilocks land. Everything is amazing. It's going to be a great economy. Stocks are going to keep rallying. We can sustain this. Jay Powell is great. Where is the disconnect here between the idea?
Okay. Yeah, sorry. So it's an important idea. I think about my parents, right, who haven't the foggiest idea what I do for a living. I mean, even after me trying to explain it to them. But when I tell them, look, inflation is, because they're always asking, what's happening with inflation? I'm like, oh, it's improving, not to fear. And my father loves to say, what the hell are you talking about? He's like, I'm going to the store. I'm still paying a lot more for stuff. Mm-hmm. And that's the disconnect between Main Street and Wall Street. We look at the percent change, and they look at price level terms. And price level terms, it's still incredibly elevated, and that's a problem, by the way, from a consumption perspective, because a lot of these things are fixed costs, like auto insurance or like food prices, that will actually continue to chew into disposable income.
Okay, that's been basically the theory.
I have to say, you need to fade that University of Michigan Sentiment Index surprise because they had a change in methodology. They're starting interviewing people on the web as opposed to on the phone. And apparently,
they don't call us anymore. I've been waiting for that call for ages. 500, 600 lucky people.
Well, yeah, exactly. Well, now you get asked on the web, and apparently you're more gloomy when you're looking at a screen.
But David, how antiquated is calling someone on the phone?
Oh, no problem at all. But the problem is that they changed methodology, and they didn't do a level adjustment for the bias that they know it's actually causing their data. Right. They put something out. I mean, this is really technical, but just...
No, I love this stuff. Tell me more. What do they actually ask, and how do they filter out answers like, I think inflation's going to be 20%?
If they don't do a fix to this, the University of Michigan survey will be about 6.6 percentage or index points below where it was a few months ago forever. Right. So it's just this change in methodology actually messes up the numbers. So I know everybody gets excited if a number misses consensus by a lot, and that happened. But it was just a technical
final
issue.
word, please.
Yeah, again, just to amplify. I mean, just keep in mind, for whatever the confidence numbers are worth, confidence has been pretty downbeat. Yet spending has been pretty robust on a relative basis, right? So we're faders of the Michigan numbers too. But I think
we now.
Yeah, exactly. But I think the inflation expectation numbers within Michigan, I think, are really useful.
Sometimes it's nice to get along. Gents, this was great. Thank you. Tom Porcelli of PGIM alongside David Kelly of JPMorgan Asset Management. President Biden unveiling a sweeping new round of tariffs on Chinese imports ahead of the November election. The decision looks to escalate measures first put in place by former President Donald Trump. The former House Speaker Kevin McCarthy joins us now. Speaker McCarthy, good to see you.
Good to see you.
Great to catch up, sir. What did you think of that from President Biden? Did Biden just out-Trump Trump?
No, he can't do that. I mean, Biden opposed these tariffs before. And I actually believe when it was only Nixon can go to China, I think a Republican administration always has a better relationship with China and a stronger one. We've watched in this current administration, they've created like an axis of evil with Russia, Iran, and China, something we haven't seen since the 1930s. And there's an interesting piece by Henry Kissinger before he passed and Graham Allison, 79, 79, and 9. 79 years since a Great War. 79 years since a nuclear weapon was used, and only 9 countries with the potential of a nuclear, which in the 70s you thought there would be 25 or 30. That doesn't just happen. So foreign policy really matters. The world is in a different place. They're looking for a strong kind of American Western leadership. And I think that's the challenges that we have. And Biden's decision in Afghanistan and what he's just doing with Israel, it's really harming the world, let alone America. And I think greater stability will go a long way.
When it comes to China, though, Biden and Trump are largely on the same path. Trump is talking about 60% tariffs on imports coming from China on top of potentially a 10% tariff wall for all imports. Isn't that trajectory, isn't that the only place, you know this well, that there's bipartisanship in Washington when it comes to China?
Well, you want to look at it. Trump's policies on China he believed long before he was ever elected. Biden has flipped his position on China in the last year. So it's kind of what you believe. And I think in China's position, China always looks long-term. So if they have somebody in there with a strong position, you usually can negotiate something there. I believe, and I think looking at the New York Times latest polling, election is today, Trump would win, and probably pretty big. Republicans would have a very big night. That you would have an agreement with China. You might think there's a little tension, you'll get a lot of good news for a while, but I think we would be in a much stronger place because there'd be greater respect on each side, and that's where you could come to an agreement.
But an agreement on what?
I think you could get a lot of places on agreement on trade, agreement on the movement of China and Russia and Iran. I think China moving into the Middle East, bringing Iran and Saudi Arabia together, you wouldn't see that as much anymore. I think America would take back the place that they have stood before.
So you were with the former president last night, according to photos I saw online. What are you hearing from him and his team about what 2.0 would look like? Would that also maybe include someone like yourself?
Look, you never prejudge where it is, but I think the president, he's very upbeat. You look at what he's going through. Interesting thing, I think the White House has taken a position, and almost every position they're taking is all political, like this China position, Israel position, what he's looking at. And I mean, if you look at Biden in the last elections, and you're a station that plays with numbers, Biden won the last election by 48,918 votes. But his favorability rating at that time was plus 10. Now it's minus 20. You've got 6 states that are swing states, and Trump has been leading in 5 of them for like 14 months. And now Minnesota, which a Republican has not won since 1972. When Ronald Reagan swept 49 states, he didn't win Minnesota, but now it's a tie within Minnesota. So it's a much different play going forward. And I think their position, they thought, going after Trump in a judicial way would help them. I think it's hurt them. You also see independents now. I mean, by a margin of 53 to 42, independents believe another 4 years of Biden will harm democracy. And they say democracy is on the ballot. So it's interesting what they have planned out. And my advice to the Biden administration, if you're in denial, you're not going to solve your problems. And they're kind of in denial of the problems they have.
Can I just ask you a follow-up, though? You didn't answer my question. Would you consider going into a Trump administration?
Look, I would consider to serve anywhere if I'm the best person to. I think in America, we need the best and brightest. But I think that's the last thing you look at. You want to lay out, make sure it's good policies. You want an election to be about policies and ideas. Then people can govern in a better way.
I want to try to strip away some of the politics from the policy and try to understand looking forward. You talk about under a Trump administration this idea of some agreement with China. I'm more focused on Europe, frankly, because under a Trump administration it was America go it alone, America first, going out of NATO, really pressuring the European Union to do more. How much is that going to be basically the state of play going forward in the Republican administration at a time where a lot of people are saying you need an alliance to really counter some of these threats that you're talking about?
That's a great question. And we should look, because now we have time to compare what transpired in the Trump administration and what happened now. Was Trump tough with NATO? Yeah, but now you're watching the European nations actually spend more what they had promised to do on their defense, which they haven't. But let me answer your question, okay? Now what you didn't have war in Europe. For the first time in any American administration in modern history, Putin had not invaded another country. Now we have war in Europe. But let me finish your answer to your question. You have 5 American embassies that have now had to be evacuated. We now have a base in Africa where the Russians are now coming into, where you have 1,000 U.S. troops leaving out. It's the place we use our drones and others. So I know what the topic is and maybe the brushness of Trump's message, but we actually had positive returns within there. So it's a difference of opinion, whether you like the headlines or not, but you really have actual facts on the basis of what a Biden administration looks like in Europe and what a Trump administration looks like.
Although there are long and variable lags with a lot of policies, so it's hard to identify exactly where some of the gains come from depending on who comes out.
Well, you had the Abraham Accords, which I believe people should have got a Nobel Peace Prize over, but had Biden embraced the Abraham Accords, I don't think you would have had October 7th.
But my question was with Europe, and particularly on the commercial side of things, because what we hear from a lot of executives is they don't know how to even shape policy, given they don't understand what the policy in the U.S. is going to be to European goods. Are they going to start to put up walls to those too to try to really enhance the industrial production of the United States? Are they going to work together? Is there going to be cohesiveness at a time where France seems to open to the idea of accepting electric vehicles from China? How does a Trump administration deal with issues, given the fact that a lot of people say we need these alliances in order to actually win on some of these issues?
Well, I think we have strong alliances. I remember in the Trump administration, I was there with Macron in the White House. I mean, look, every country is going to want to compete with one another. I think what America wants to see is a level playing field. It's a disadvantage if America starts further behind. And France, they want to have a level playing field, but every country is going to compete in different ways. And I just believe at the end of the day, you will find the policies we had under the Trump administration, the policies we have today, America didn't have inflation. We were stronger around the world. Incomes were rising. And what you're finding in the New York Times polls, America sees that too. And I think the number one issue people are going to drive is going to be inflation, the border. Are they going to be the 2 largest drivers of this election?
You don't think that birth control and abortion are going to be a big factor as well?
I do think it'll be, but it'll be in certain spots. It was a big factor in the last election. But remember this. I mean, you also look to what's going to happen in the Senate and what's going to happen in the House. I was leader for 5 years, and every single cycle, when I was leader, Republicans picked up seats, even though Republicans lost everywhere else. When Biden was on the ticket, it was the first time since 1994, not one Republican in the House lost. In the last election, abortion was a very big issue. But as leader, I picked up 5 seats in New York and 5 seats in California. You would say abortion would be the top issues there. So I believe in pockets. Arizona could be an issue. Florida could be an issue. But I think it'll be more in a pocket than it will be national.
You talk about your leadership. Speaker Johnson had 11 Republicans vote to oust him. You only had 8. Democrats came to save him. Are the Democrats in charge of the House at this point?
Hakeem thinks so. I mean, he says it on 60 Minutes.
They saved Speaker Johnson.
Look.
He actually had more Republicans vote against him than you did, but you lost your job.
That's not right, huh? Look, I don't believe in the motion to vacate. I think Democrats play politics on both sides. If they didn't think the motion to vacate was right then, why did they think it under me? But it is what it is. It's politics. They think they're going to play it for a political purpose to win. Republicans have a better chance on winning seats this election in the House than they did in the last 2 elections we won. So I think it's going to be a big night. You watch what happened in the primaries last night in Maryland. Hogan is going to make Maryland competitive. And what that does, it expands the playing field. The Republicans are going to win the Senate. It's a simple math question. The presidential election, it's still up in the air, but you look at every polling today, Trump is in the lead, and Biden's doing nothing to change that. In the House, there's a better opportunity for Republicans. The only challenge and advantage the Democrats have is they're beating us now on money rather largely, and that will make a difference.
I've got about 10 seconds left. Can you give us a name for VP? What do you think? Who would you like to see in that seat?
Look, there's some great people, and
10 seconds.
I sat with like 10. Look, I think Tim Scott is great. I think our governor in North Dakota is excellent.
Nikki Haley?
Look, if he picked Nikki Haley, I would say the race is over.
Yeah, I think
the race is over.
That's the entire party.
If you look at the primaries, even in Indiana,
10.
20%.
I've only got 10 left to the break now, Kevin. We've got to go. Speaker McCarthy, thank you, sir.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.